Okay, can everyone hear me? Okay, so hi, those that are have joined the live stream. The webinar today will be on entering trades, and I'll discuss different methods. The three main methods being entering pre-breakout, entering during breakout, and entering post-breakout. Now I'm not at home, so I'm missing my second screen today. So I'm going to be switching between the text that I wrote to discuss today and the charts a little. So it's going to be a bit more messy than the usual webinars. Okay, so three main methods. Sorry, just a second. Okay, so there are three main methods we shall discuss today. And sorry, where's the text here? So entering breakout, this is the one I like the most, and I combine it with a lot of other stuff. Entering during breakout, the one I like the least, and entering on a retest. So yeah, now obviously all of these have their own pros and cons, and I will be going through them shortly. So entering pre-breakout, out of all the trades, I'll just read it from here since it's like too much to switch every second. So entering pre-breakout has the best risk to reward ratio out of the three, because you will probably enter at a much lower point than using the other two methods, but it has the lowest success rate since you do not yet know if the coin has begun its upward trend or if it will continue breaking out or not. Also, it's the slowest out of the three methods since obviously it hasn't broken out, so it's likely accumulating prior to the breakout, even if you get it correct. So basically, pre-breakout, pros, best risk to reward ratio, and I mean, it has the lowest stop loss, but that's implied when you say best RR, so I'll just leave it at that. Cons will be that lowest success rate, slowest to move. I will go through several examples, so we have to. So what I decided to do is I'll just go through the movement of Bitcoin since March, and I'll take a look at all of the examples. So basically all of the movements. I think these are the May 5th example. Oh, that's no retest, yes. So here around May, we had a triangle, a symmetrical triangle. Now, if you followed the previous webinars, you know that especially the elite wave ones, you know that the triangles are usually either 4 waves or B waves. So in this case, I think it was probably a 4 wave. So we had the A, B, C, D, E. Now, entering pre-breakout here. Now, when you want to enter a fourth wave triangle, you need at least the D wave to be completed, right? So say that you're trading this live. Now, once you have this pattern, you do have 2 touches on each line, so both the support and resistance line. but here you don't really know if that's a triangle or not. Like this can develop into irregular flat, WXY, even bearish impulse, anything. But once you get the D wave here, the retracement usually goes to the 618 of the preceding wave. So C up to here, you get this. Now, this is a perfect picture perfect textbook scenario, but usually it doesn't happen this way. So it's, if all of them happen this way, it would be super easy to trade them, but they don't. But in any case, you see the D wave form here. Say that you enter as soon as the retracement begins, right? Now, the good thing about this is that say that you entered in the middle, right? The stop loss is relatively close, so that's less than 5%, right? And the invalidation level is pretty clear. So I don't know, if you, again, these projections are on the previous webinar, so one of the ways to find the target for a symmetrical triangle breakout is to project the length of the triangle to the breakout point. So in this case, something like this, right? So say that you entered here, like I said, in the middle, stop loss is just below the C wave. Going with a target, here you have a roughly 2.5, 3 to 1 RR, which isn't bad, but isn't great. But still, it's like pretty easy to trade this. And then afterwards, obviously, like if you entered such a triangle with a stop loss below C, so your original stop is here, but as soon as the price breaks the D high, so as soon as it breaks this here, then the breakout is confirmed, and then you can move your stop to below the E wave. So yeah, basically if you entered here, at first your stop would be roughly 4.5% below the entry, but then after the breakout begins, you can move it to 2%. Now, yeah, like when you have such a small stop loss, it's very, very easy to make a break-even trade because like your stop is 2%, right? So once you're 10% in profit, if you sell about 20% of your stack, then even if your stop gets hit, you'll break even. So let me just, I'll do another 4-way triangle and then I'll go to the June one. Let me just delete these because I'll get confused when I come back to them. Now this gave a retest. I'll go back to this eventually, but I'll go one by one. So once we complete all of them, I'll go back and show you how they can be combined to form more valid strategy. Same thing here. So now this would have been more difficult to notice because it's an expanded irregular triangle. The B wave goes high above the entry point. I mean, sorry, the previous high. So ABC, once you have the D here, the E wave. Now, a lot of times the E wave is truncated, so you'll just have a tiny E wave, but in both these cases it wasn't. Now this one actually went slightly below the, actually went all the way to the 786. So again, you entered, say that you entered at the 618. So your stop is 1.44% below. And if you projected the length of the triangle as a target to the breakout point, you would have gotten 6-to-1 RR ratio. This is more common than the previous fourth wave triangle. So usually if you manage to get in at the E wave, you'll probably get a more than 5-to-1 RR, which is pretty good. And that's the minimal target. Like as you can see here, Bitcoin like smashed it and just continued to the high 15Ks. Probably would have been stopped somewhere here if you trailed it. Okay, so that's it. And I'll do another example on pre-breakout without using elite waves. I think it's the June 25th example. It's this one. So here you don't have a symmetrical triangle. This might be a descending triangle, but it's probably not a pattern at all. So here you have a relatively strong support at 9K. You have numerous long lower wicks, signs of buying pressure. And then on the third test of this area, so I consider this pre-breakout because there's a descending resistance line and price hasn't yet broken out from the resistance line. So it's hovering at support. And on the third touch of support, it generates significant hidden bullish divergence. Again, if you're not familiar with hidden bullish divergences, you should watch the RSI webinar. It's from 2 weeks ago. So yeah, third touch of horizontal support and hidden bullish divergence. So this is a strong sign of that the bearish trend will reverse, and it's very akin to accumulation patterns. But the problem with these, as opposed to fourth wave triangles, is that it's a lot more difficult to place a stop loss here. Like, for example, if you entered here, say that you got the exact bottom, you won't be able to place a stop loss here until the price actually reverses. So if you were entering here, then you would have to manually trade this. So say that enter here without a stop loss, and then check if by any chance you get a bearish impulse. So if you get something like this, then you'd be able to sell at a retest. But it's it's more difficult to trade this when you don't have an exact pattern. Okay, so that's it for pre-breakout patterns. I'll just go through the pros and cons quickly. Was I writing this somewhere? I think so. Where's my text? Text. It's here. Okay, so pre-breakout. Conclude. So yeah, we have the pros and cons. Works best in fourth wave or B triangles, and with bullish divergence. I'll write hidden in parentheses since whenever we have accumulation, I've found it that hidden divergences are slightly more common than regular bullish divergences. Okay, so yeah, just gonna leave this there just for a second. So it has the best risk to reward ratio, but it has the lowest success rate since you don't know if the price is actually going to break out. You're just assuming that it will. And works best in fourth wave triangles or if you have hidden bullish divergence. Now, second one, entering during breakouts. I almost never do this. I don't like it at all, but it's a valid way to enter trades, so I'm gonna cover it, but I rarely do this. So yeah, it's very risky because you can get caught in a fake out and then your stop would be very, very low and you might have actually bought the exact top. Happens a lot in irregular flats. Again, that's in the previous webinar. So when you have something like this, so you have an ABC, but the B wave goes just slightly above the top of the original A wave. So price might go down, you might think correction is over. As soon as the high is taken out on the B wave, you have a massive impulsive C wave, and you might have gotten caught right at the top. But it's the fastest out of the three. So if you manage to do this successfully, you will probably enter as soon as the breakout begins, and you can get profit like immediately because the price would be expected to continue moving higher. Success rate, I don't know, I'm leaving it as ambiguous because sure, it can be high if you do this correctly, but it's almost impossible to do it due to the frequency of fakeouts, especially in the cryptocurrency markets. So yeah, again, I rarely do this, so I don't have any, like the previous Bitcoin examples are examples of trades which I actually did, while for this one I have to find something after the fact. So the examples I'm going to be using for this, I never actually did them. I just went through the charts afterwards, and I saw examples of price action when the price acted in this way. If I were to do this often, which I don't, I think the most profitable way would be to set very close take profit targets. So basically scalp. So enter immediately as soon as the price breaks out, catch maybe what 3, 4, 5% profit, and then get out for the trade. So yeah, there's an example on April 2nd. I think I hid it. Yes, it's here. So there's basically, you have a horizon, like this was the first pattern movement that I saw on Bitcoin since the upward move begins in March. So yeah, basically you have a horizontal resistance area here. This looks somewhat like an ascending triangle, but we're not entirely sure. And Bitcoin goes up, it purportedly breaks out above this resistance area, but then it immediately turns down and would have stopped you. Now the thing with this is that sure, it eventually moved upwards again, went down and then broke out, but I don't really see a way to place a stop loss here. Like, say that you entered as soon as the price took out this high, right? So you entered here. Like, I don't know, maybe you could place a stop here, which is 12% down and still might be triggered here, which is 15. So yeah, the only way to trade this, in my opinion, would be as soon as you enter here to have like take profits here and here, and then I don't know, move your stop to break even. But again, I'm not usually, I'm not mainly a short-term trader, so I rarely do this. So quick pros and cons. So this will be the shortest out of the three since I don't really do this. During breakouts, lowest RR, so that's the con. But as a pro, fastest to move, I guess. And it's the riskiest out of the three, so if you're a beginner, I would recommend that you do not do this. And let's go to the third one. This is my favorite because you can combine it with the first one a lot, and the rest of the examples I'll do will be on that one. So this would be entering on a retest. Just clean this up for a second. This goes. Okay, the next would be entering on a retest. So this is probably the safest way because the invalidation level would be immediately visible. And as for the time it would take for the move to unfold, it's somewhere between the first and the second methods. It's probably the best for beginners, easiest to do. Sorry, I just have to mute this. Never mind. It's the easiest to do. By the way, those that haven't joined the premium channel, I would encourage everyone to do that. Like you just had this trade hit the second take profit target. And yeah, the best for beginners probably. Let's go through some examples. I think it's on late April Bitcoin. Yeah, it's this one. So, and you can do this on different time frames. I had the webinar on combining different time frames last week. So you should also watch that if you haven't done that. So first we have this descending resistance line, the dashed one, right? So the price breaks out, goes here and retests, right? So this would have been entry trigger 1, and your stop would have been below the previous low, which is 4%. So yeah, the magnitude of the stop loss is very similar when you enter pre-breakout and when you enter on a retest, but it's much higher when you enter during the breakout. Okay, so yeah, first retest. Now retests can occur at both horizontal and diagonal levels. Right, so here we have a retest of diagonal level, and then the price moves higher and reclaims the previous horizontal level. Now I like combining them a lot, so whenever you have a retest which is both a diagonal and a horizontal level, it's a much stronger sign of support than if you just had one of them. So retest one here, goes higher, retest two. Right, so these are two valid entry points. Average would have been somewhere around here. And then we have another breakout which did not provide a retest. This happens. It neither tested this horizontal level nor the diagonal. So if you only did the retest, you would not have been able to enter here. But afterwards, it gave a retest on the next horizontal level. So one entry here, one here, and one here. Yeah, so sometimes the retest occurs at only the horizontal level instead of the pattern. So we have May. Now again, even the previous pattern, so this is the fourth wave triangle we discussed in the first section, so entering pre-breakout. After the breakout, it gave one retest here and another retest on horizontal level. So you can combine all of these, right? So if you had the A, B, C, D, E triangle here, and you entered here, you can also add here and then add here again. Now, retests, especially of horizontal level, are stronger if they have a long lower wick, like this, because it's a sign of a buying pressure. Obviously, if you're shorting, then it would have to be a long upper wick because it's a sign of selling pressure. So yeah, it gave a retest here, moved higher. And I think okay, so May 17, breakout, retest only on the horizontal level, right? So keep in mind, this happens a lot, so you don't get a retest of the line, but you get a retest of the horizontal level. And here you didn't get one at all. And let's check the Dogecoin example. Sorry, this is too messy right now. Okay, here's Doge. No, it's on the Poloniac chart, my bad. Yeah, it's here. Right, so you have a breakout from the descending resistance line, and you have a retest. So this has all three, right? So you have a breakout from a descending resistance line, you have a retest of that same descending resistance line, and you also have a retest of the horizontal area. So yeah, basically you have all three. Is there any bullish divergence? No, that would have been the best. So all four. Again, we have another retest. So basically this is at the entry right now. You have two tests of the same horizontal level, one test of the descending resistance line, and maybe a bullish structure, but again, this either broke down here and retested here, or it's still going, but this is why I use horizontal levels a lot more than I do diagonal, because I think diagonal levels are subjective. Like you can draw a trend line almost each way you want it by either using closes or wicks or just most touches. So yeah, horizontal levels I feel are a lot more objective. And another way would be to look for breakouts and retests of a line and then a reclaim of the horizontal level afterwards. So YFI is an example of this. So I feel like these are stronger than the previous one. So the difference in between this and the Dogecoin example I just took previously is that in this case, you get the retest of the descending resistance line, and then YFI increases and reclaims this level. So in the case of Dogecoin, the horizontal level coincided with the descending resistance line, while in the case of YFI, it reclaims it shortly afterwards. Okay, so let me just do the pros and cons on this. So entering on a retest. Pros, easy to spot, decent RR, decent time it takes to develop. Cons, honestly, the only con is that it's not the best at anything. But if you take it individually, it doesn't really have any cons in my opinion. Now, how to make it better? So combine horizontal and diagonal retests and combine with bullish divergence. Now, when I say combine with bullish divergence, it's because I use the RSI a lot, but if you use, I don't know, Bollinger Bands, moving averages, clouds, whatever, combine it with the bullish indicator in those, or in the bearish indication in those, if you're shorting instead of longing. Now, let me just do another few examples. So yeah, best strategy in my opinion is to combine pre-breakout entering and retest entering. So basically you enter pre-breakout and then you add on a retest afterwards. So I think Bitcoin, there's an example on Bitcoin on late October, this one. So yeah, we had that fourth wave triangle, right? So we have an A, B, C, D, E. So if you're looking to enter pre-breakout, you would have entered somewhere here at 1340.70 something. Then price breaks out. Like I consider this a retest. Like don't go looking at exact dollar values. Basically, if you want to enter on a retest, you need to have orders all the way here. So maybe in like a 200, 300 trading range or something. So yeah, this did all three, right? So it retested the descending resistance line, it retested the horizontal level, and you could have entered pre-breakout because there was a pretty clear fourth wave triangle. Bullish divergence, not really, I guess. You could potentially consider this a hidden, but I think that's slightly grasping for straws. So yeah. scratch that. But still, you have a retest of a diagonal and horizontal level, and you could have entered pre-breakout. And the entry level wouldn't change that much. So if you entered here and then entered here again, your average entry would be here. Your stop is about here, so that's less than 2%. Let me just clear them for a second. Bitcoin in May. What example do we have in May? That's August. July. May. Okay, yeah, these ones. So this one did not give a retest, so we don't need it. This one did, so you could have entered pre-breakout and then post-breakout. And this one actually, yeah, this one was the one I was looking for. So it's almost the same as the other one. So basically we have a fourth wave triangle here. The E is slightly truncated, but if you entered here, and then you have a tiny retest of the breakout level, and then you have another retest here. So yeah, those would have been your 3 entries. Again, let me clean up the chart for a second. When you see a pattern, I want to enter pre-breakout, look for a horizontal flip and enter. Okay, we did this. Let's do the August 2nd example. Yeah, I'm gonna have to clean this up just a second. Okay, yeah, so yeah, I think this example encompasses it better since it has all 3 methods. So say that you entered on a breakout here, you would have been stopped quickly, right? You have a descending resistance line, you have a pretty clear breakout right here, price goes higher, and then it stops everyone out. So this is why I said, like, if you're trying to enter on a breakout, it should be something very short term. So if you're entering during a breakout, I would suggest maybe something like this. So a stop at the absolute most recent swing low. But again, this gives you like a 1-to-1 RR ratio. So in my opinion, it's not even worth trying. But I know everyone has their own trading style. Now, this would have been a good retest with this massive long lower wick. I would have entered here probably and then stopped here. So yeah, obviously it doesn't work all the time. But then here we have another drop. So what this drop does is that it retests it validates in a way the ascending support line, since we didn't really know if there was an ascending support line prior to that touch, because it's the fourth one. And it also touches the horizontal support level. Closer look, we also have bullish divergence here, right? Lower high, higher low. I mean lower low, higher low, sorry. So this would be a retest of a horizontal level, of a diagonal level, and you have bullish divergence. And in this case, you would have combined entering pre-breakout and entering on a retest, because this has not broken out from the resistance line yet. So you're buying in the accumulation phase, but it's also a retest of horizontal level. Afterwards, it did not give you another retest. But now, these levels often get touched again. This was the case here. Another hidden bullish divergence in this. No, actually, it's a regular bullish divergence, my bad. Yeah, basically regular, lower low, higher low. And the price gave another upward move. Okay, so yeah. me just clean this up and conclude. And so yeah, in my opinion, the best way to enter trades would be to enter pre-breakout and then add on a retest. If the retest is both a horizontal and diagonal level, that's a strong plus. And obviously, if you combine it with bullish divergence or hidden bullish divergence, it further increases the chances of success. Okay, so that's going to be the brunt of the webinar today. And now for the rest, I asked people in the premium channel to ask questions. And so basically, I'm going to do Ask Bitcoin, Atom, which are the rest, Eng, RSR, ADA, and then DOT. So if you want me to do any others, just write down here. I'm just going to take a short 1 minute break and I'll handle them. So I think there are no other questions. So I'll just do the ones that are asked and then asked. And then we'll be done. Okay, so the first one was ask the Bitcoin pair for Ethereum. So here it is. Okay, so it has a lot of the things we discussed. So I'll just add some stuff from the previous webinar. ETH is moving upwards pretty well. Next resistance is here. Now, indicators are bullish. MACD is going up, RSI is going up, it's above 50. And the stock oscillator has made a bullish cross. Now, so basically on the daily, I think this is bullish. If you don't understand this here, watch last week's webinar. I posted it on the trading community. So, descending resistance line, I don't see how you would have entered pre-breakout here because there's no pattern. I mean, I guess you could consider this some type of, actually this is a pretty good channel, but I missed it, like I'm just noticing it now, so I didn't enter. Breakout, retest. Now I said in the beginning, if you remember the YFI example, so you have a breakout, a retest, and then a reclaim of a horizontal level afterwards. So this is different than if the horizontal level coincided with the descending resistance line. But this is a much stronger sign in my opinion, because the price is already showing strength by moving upwards and then reclaiming the previous resistance area. What's another good sign here is this hidden bullish divergence. So slightly higher high. These are very, very strong continuation signs. So yeah, I'm pretty sure S will move up to here as Bitcoin. So basically what we have here is a breakout and retest of a diagonal level, reclaim of a horizontal level afterwards. No, sorry, hidden bullish divergence, and then we have the reclaim of the horizontal level. So retest is here. The second one is the hidden bullish divergence, and then we have a reclaim of the horizontal level. Indicators also look bullish, so in my opinion, the ETH Bitcoin pair is pretty bullish. What's the other ones? I'll do GRT later. Atom, Ange, RSR, and ADA. Okay, let's go with Atom first. Oh, damn, that's a nice upward move. Need a little more data. Does Atom not have any more data, maybe? Doesn't, interesting. So Atom is at an all-time high. Interesting. I'll check another pair just to be sure, because it's slightly weird if it's at an all-time high. Maybe the Poloniex one. Actually, it is at an all-time high. I have to do an article on its own. It might go to price discovery. So yeah, that looks pretty bullish also, because obviously price discovery means that there are no more resistance areas above. So again, daily indicators look bullish. If you don't know how to read this, there's a specific webinar just on these indicators, but multiple webinars have discussed only the ways in which I use them and not actually how they're created or anything. Again, we have a breakout, we have two retests, hidden bullish divergence. Like the majority of coins that have moved, they kind of have the same pattern here. So if you were able to identify these patterns, it wouldn't have been that hard to like make profit on this. Again, it is identical as Bitcoin pair. You have a horizontal breakout, a retest of the diagonal line, hidden bullish divergence, and then the price moves higher, except in this case there is no reclaim of horizontal level, but maybe this one, I guess. But yeah, same as Bitcoin, looks pretty bullish, probably will continue, but it looks even more bullish because it's in price discovery, so there's no resistance above the current price. Ange was the second one. Do we have Ange here? Yes, we do. I don't know. Oh, okay, so yeah, I remember Ange. So I also outlined Ange in the previous webinar. Let me just make another pair which has more data. Okay, so reasons why I do not like Ange. It's still trading below this resistance which has been in place since March, and it's extremely close to it. So in coins such as this, I said it in the previous webinar when it was here, yeah, that's last week, I would wait for this in order to enter, right? Because my battery is dying, never mind. So I would wait for this in order to enter, because yeah, if you enter during a breakout on this, you would have been immediately stopped in this long upper wicks, but lower time frames don't look bad. But since it's so close to resistance and you didn't catch it down here, I just wait on breakout and retest. Daily looks pretty good though. Now RSR. Very, just let me see another pair. No, this is all there is. Now, reasons why I don't like this pair. It doesn't have a lot of data. I don't like trading stuff which have like only a few months of data. But besides that, looks decently bullish on the daily. A strong hidden bullish divergence. So here's what we have here. If we try to use what we learned, we have a breakout only from horizontal level. We have a retest of that level in the form of a long lower wick, which is a strong sign. And then we have hidden bullish divergence. So yeah, I do expect RSR to continue up. I will actually just make a tick here so I can add it to my watch list. And I might even trade it later. And it was ADA, I think. Yeah, ADA was the last one. ADA is also looking very impulsive, probably will go higher. I can't really count this, so that's what I don't like, but now again, this is one of those examples where it broke out from a diagonal level and did not give a retest. So it only gave a retest on a horizontal level instead of touching the diagonal one. But yeah, besides that, it looks pretty bullish. This was a good entry if you were trading. Probably would have had orders all the way down here, which would not have been triggered, but that happens. So don't go chasing it when that happens. But just so you reduce the risk, you should have orders in both. So both the diagonal and the horizontal levels. Okay, so I did those four. Now we have DOT and GRT. And those are going to be the last ones. So yeah, DOT has been going really crazy. People have asked me about this in the group, but see, here's the thing. We do not have a lot of data. There was a breakout from a diagonal line. No retest at all, like not even horizontal. So now it's parabolic. Yeah, I don't see any way to enter dot. Like it's a completely parabolic move. It has no support whatsoever. Sure, it can go much higher than this, but you missed the trend. Like if you didn't enter down here, don't try to chase it here. Again, it can go higher, but I don't think there's anything. There's no way to trade this, in my opinion. Like sure, you can just go all in like a full chat, but yeah, I don't see a way to enter that right now. Like even if you look at low time frames, it's I mean sure there's a tiny ascending. It's not even, it's validated once, so it's a parabola. I don't think you can enter this at the current time. And finally GRT. I think this also doesn't have data. I think I covered it a while ago. Yeah, same. Again, these are really difficult to analyze because data begins on December 17th, right? So there's exactly 1 month of data. You know, the majority of coins have like at least 2 years of data. This is 1 month. But for what it's worth, so we need to use a lower time frame. I mean, yeah, there is a breakout here which did not retest, but the horizontal level retested, right? So as you can see, even when the price breaks out from a diagonal level, it is more likely that it will retest the closest horizontal level than it is to retest the diagonal level. But again, I don't, it looks bullish in like very low time frames. So if you look at 2 hours or something like this, yes, it does look bullish because it reclaimed this level and going higher, but yeah, I wouldn't personally trade this. So I will just recap everything now. So yeah, combining entering pre-breakout and on a retest. Retests often occur on horizontal levels. They become stronger when combined with long lower wicks and especially bullish divergence or hidden bullish divergence. Now my laptop is dying. We're like 55 minutes in, so it's gonna be 5 minutes shorter. But yeah, I have to close this. So everyone, thanks a lot for joining, and I will see you on the next webinar.